Hello, folks. I'm Rodney Hathaway, Chief Investment Officer here at Waukesha State Bank Wealth Management, and welcome to our October edition of Market Chats. As we move into the fourth quarter and the celebration season of the year, our team here at Waukesha State Bank Wealth Management wish you and your family a fantastic holiday season. We all have much to be thankful for, and our team wants to thank each and every one of you for the trust you've placed in us as we help you with your investment and financial needs. As we count our blessings, the capital markets have given us plenty to celebrate in 2025. Barring a price correction in the last 2.5 months of trading, the stock market is poised to notch another year of double-digit returns in 2025. The S&P 500 gained 8% in the quarter and is up nearly 15% year-to-date through the end of September, while the Russell 2000 Small Cap Index was up 12% in the quarter and 10% year-to-date. Bond returns are also solidly positive, up 6% this year. Buoyed by strong corporate earnings growth and the prospect of further interest rate cuts by the Fed, all the major indexes are up near all-time highs. It is interesting to note that small cap stocks have outperformed large cap stocks recently. Historically, this has been a harbinger of the beginnings of a new economic cycle with the economy. Currently, consensus among economists is the U.S. is in the later stages of an economic cycle. However, most of these same economists have lowered their probability of a recession in the near future. So while there is some debate whether our economy is decelerating or accelerating, we tend to believe that we have more of a tailwind to growth over the next year. International stock market returns continue to lead domestic markets in 2025, with the ACWI ex-US index up 26% through the third quarter. Looking forward, the prospect of further US dollar weakening relative to major international currencies is likely, considering the agenda of President Trump to narrow the trade deficit. The economy is still on solid footing, with GDP growth for the third quarter expected to be around 3%. Unemployment has ticked up slightly, but is relatively low at 4.5%. While investors are anticipating the Fed to cut short-term interest rates 2 more times this year, we believe there is a real possibility the Fed may pause if presented with more strong economic data. One key variable to the economic equation will be the continuation of the government shutdown and the impact that might have on economic growth near term. With the continuation of the shutdown, we may not have timely economic updates from the government for several weeks. In the meantime, we'll have to rely on spot checks with companies we speak with on a regular basis to try and gauge the trajectory of business and economic activity. As of now, we have not received any information that businesses are curtailing any capital investment projects. If anything, we believe the level of capital spending over the next couple of years could reach record levels. Please reach out to any one of our advisors if you'd like to discuss any of these topics in more detail. And as always, thank you for tuning in this month, and we look forward to future chats with you.